Welcome to Chako International. I am Nilamarjana speaking. This is related to currency convertibility, particularly capital account convertibility. Chako International contact online coaching from 2nd May for Civil Cse Prelim. A last minute booklet for Civil Cse Prelim will be available from 20th May 2022 on PDF format. Capital controls are used by the state to protect the economy from potential shocks caused by the unpredictable capital flows. Capital account convertibility means freedom to convert local financial asset into foreign ones at market determined exchange rate. It can lead to free exchange of currency at low rates. Also, it can result in the unrestricted mobility of capital. It can trigger stepped up inflow of foreign investment. Transactions also can become much easier, occur at a faster pace. But negativity, it could destabilize the economy, especially if there is a massive capital flows in and out of the country. Currency appreciation, depreciation could affect the balance of trade. India current has full convertibility on rupee in current account, such as for the export and imports are concerned. However, India's capital account is partially convertible. Capital account converted faces a country's financial system, which allows for the conversion of foreign financial asset into domestic financial asset and vice versa at market determined exchange. Such converting may be completely unrestricted or may be partially regulated. Main advantage of full capital convertibility, it will help India's defensive market, help India attain the status of a leading global economy, improved access to international financial market, reduction in cost of capital. That this will open the Indian financial market to global competition would in the long run contribute to the development. This will ensure the availability of large funds to supplement domestic resources and thus promote economic growth. Capital account convertibility removes the limitation of global flows on the capital market. Currency can be converted into any other currency without need for the transaction. In case of capital account, freedom of movement from local to foreign currency banks strengthen the economy, promote fund availability, promote national economy, also provide enhanced access to global financial market, reduces capital cost. Indians get an incentive to hold and acquire foreign security asset. It makes the financial system globally competitive. But drawbacks, cost push inflation may result of market determined exchange rate are higher than officially fixed exchange rate, and price of essential import rise. If currency conversion is not well managed, market exchange rate can cause the domestic currency to depreciate, harming the trade and capital flows in the nation. Conversion of currency makes it extremely volatile. When a currency depreciates due to speculative actions, for example, 1997-98 capital flows from South Asian economies, currency depreciations makes capital inflows less likely. Full CCA can lead to erratic flow of capital. In today's global context, such close integration will open up Indian economy to the global shocks, and speculative activity can lead to capital flight out of the country. Imposing control will become difficult in a globalized environment once it is introduced. The Tarapur Committee, they set up for the capital account convertibility. Inflation rate should remain between around average 3 to 5%. Gross NPA of the public sector banks need to be brought down to 5%. RBI should have a monetary exchange rate band plus minus 5%. External sector policies should be designed to increase the current receipt to GDP ratio and bring down the debt service ratio from 35% to 20%. 4 indicators should be used for the evaluating the adequacy of foreign exchange reserve in the safeguard in case of emergency, plus minimum net foreign asset in the currency ratio of 40% should be prescribed. Then there is a second time it also committee for the second report that ceiling of external commercial borrowing should be raised for the automatic approval. NRE should be allowed to invest in capital market. NRE deposits should be given tax benefit. Improvement in banking regulations. Foreign institutional investors should be prohibited from investing fresh money raised to participate in notes, and existing patent note holders should be given an exit route to phase out completely the PN notes. But what are the major factors for full? There is a precondition for full converted capital account convertibility shall be introduced in an economy only when there is a low inflation, low fiscal deficit, low non-performing asset, higher forex reserve, functional independence of central bank, and no restriction on gold movement. Now the fiscal deficit 6.4% of GDP, interest 43% revenue received, revenue deficit 3.8% of GDP. With this, the president complete like, subscribe, put the bell icon. Thank you.